Good morning, clients. Good morning, clients. Welcome to this week's weekly morning call and webinar. Can you hear me? Hello? Okay, yeah, sorry. Good morning, clients. Welcome to this week's morning call and webinar. We just had a slight sound problem just now, but I think everything's A-okay. I'm Joshua, I'm the head of research, and I will be starting with some macro updates. Kenneth is on leave today, so there'll be no market analysis today. But after that, we'll move swiftly on to MoneyMax, which will be presented by Colin. Disclaimer. Okay, so some updates on the US. I think amongst the lead indicators of the US, core capital good orders are pretty robust. That's over here. The uptrend continues in terms of smooth year-over-year changes for core capital goods orders. This is a very good sign that US investment is picking up. However, on the housing market, housing starts and new home sales are still expanding, but at a declining rate. So I think the impetus from housing will be less in the economy. However, existing home sales are pretty robust. So existing home sales, of course, is not as strong a GDP adder than housing starts on new home sales because it's existing stock that is just being traded. However, what usually follows is that you get good consumer goods, consumer durable goods numbers from that, because after people buy a house, they tend to stock it up with white goods and other furnitures. Most importantly, U.S. corporate profit is not trending down. Actually, it's on a trend up. Okay, so if you look at the red line is quarterly U.S. corporate profit, this for the entire U.S. economy, and the blue line is the 4-quarter moving average. So as you can see from previous cycles, once the quarterly reporting of corporate profit goes below the blue line, which is the 4-quarter moving average, that's when you could probably start worrying about whether the bull market is going to end. Okay, so if you can see in the last cycle, December 06 was when you went before the 4-quarter moving average, which is about 10 months ahead of the bull market ending. Now in 1998, we had that top out at the beginning of 1999, and that pretty much was a harbinger that the bull market was about to end as well. So if you look back, the history is quite good. Where we are now is that the quarterly reporting of U.S. corporate profit is nowhere near going below the 4-quarter moving average. So I think it pretty much suggests that the S&P 500 bull market is still on, even if we do have some short-term corrections. Other updates on China. Our industrial production by volume and freight moved nationwide continues to be on an uptrend. That shows economic activity is picking up. Industrial profit continues to rebound, and employee wages has rebounded as well. So we have earnings, we have activity picking up, and of course we have the PMIs steadily trending higher as well. And our outlook for China, barring macro risk events, is positive. Now, technically, China does not need to raise rates, because actually the lending rate is way above the rate of inflation, which is just only very slightly picking up. And the rate of inflation picking up is more of a signature of economic activity improving. However, the worry is in home prices. So you can see here new home prices and existing home prices have surged between 4 to 9% this year, which is very high. And loan to nominal GDP ratios have also picked up over the last year and a half. So although I think the Chinese authorities would probably like to cut rates, I think because of home prices, they will not be able to. So I think although real estate does represent a macro risk, and of course shadow banking is pretty much tied to that because a lot of the loans are tied to real estate. I think what the Chinese government can do is that they will probably do sector-specific measures rather than use the blunt instrument of raising the interest rate. So I think although the market has panicked a little due to this rise in home prices, there are options available to the Chinese government. Also going forward, we're going to have the third plenary in November, and Chinese leaders have signaled that they will probably implement pretty wide-ranging reforms this November, which I think could prove catalytic to the Chinese economy. Now, going on to Singapore, we have a strong rebound in exports, and we also have a rebound in corporate earnings. We have construction output steadily trending higher. I think the Singapore economy's GDP numbers will probably go on the high side of the range this year, and we are continuing to be positive over the STI. Despite the volatility that you see here, we are on an uptrend. Globally, inflation is actually starting to pick up, which is more of a sign of economic activity picking up. So as you can see, the 12-month moving average of the CPI in the US is slowly ticking up. Industrial Asia as well, the green line, I think the 12-month moving average is also ticking up. In ASEAN, we've had a surge in inflation, but that's due more to one-time specific policies rather than an endemic change in inflation expectations. So actually, we expect that to moderate going forward. Europe is the only region where you see declining inflation, but on the whole, I think we're seeing inflation starting to pick up slightly, and that's a sign that economic activity is picking up. And as long as it's not too sudden or huge, I think this turn of events is probably good. It's another signal, rather, that the equity bull market is still on, which is our view. We're reiterating that for gold, there are some long-term fundamentals that are not supportive of the gold prices. Basically, you have the U.S. government budget is actually starting to narrow. You have the trade deficit also narrowing. And as you can see here, Federal Reserve total assets, the blue line, despite the surge in assets built up due to QE, there has been no positive effect on the price of gold. There's no change to our broad view. We're still overweight stocks. We think that that's the place to be. We think Singapore will probably outperform going forward. We are positive on China. For the US, we are overweight, but there could be a tactical pullback, which Kenneth has actually flagged over the past 2 weeks. We continue to be neutral to underweight bonds and underweight gold. Okay, I'll pass you on to Colin now, who will talk about MoneyMax.
Hi, morning everyone. This is Colin, and I'll be sharing on MoneyMax, which we have initiated coverage today. MoneyMax is in the pawnbroking business, and we have identified this to be attractive stock given the investment merits, which I'll be sharing in the presentation. Okay. On the company background, okay, it has incorporated in 2008 with its first outlet issue, and since then it has expanded to 29 outlets in this year, and recently got listed on the SGX. Okay, the company is run by Mr. Peter Lim, who is the CEO, and is assisted by his siblings, all of whom had run a Suki jewelry business, one of Singapore's leading jewelers since 1991. Okay. MoneyMax has its main source of revenues mainly come from pawnbroking services, and is retail and trading of pre-owned jewelry and watches. And it's also the only pawnbroking chain to be awarded the ISO 9001 and Case Trust accreditations for its quality management systems and its fair trading and transparency to customers. Okay, on the pawnbroking, I'll be sharing on the business processes of this pawnbroking company. Mainly, you have the pawnbroking process, whereby customers walks into its pawn shop outlets and offers valuable to be pledged as collateral. So the item that's typically accepted includes gold, jewelry, and branded watches, as well as gemstones. And these pawn shops normally offer a loan that is up to 92% of the value of the collateral and issue a pawn ticket, which customers will then is able to redeem within 6 months. Okay, with this ticket, the loans are have an interest rate that's chargeable at 1.5% per month, and this is capped based on the law regulations. Okay, on the redemption process, customers is able to either redeem the pledge in full or partially, and he or she may also be able to renew the loan. Okay. If the pledge is unredeemed after the redemption period of 6 months, then these items may be sold via license auction, provided that it is pawned for a sum of $50 or more. If it's less, then the pledge will become the pawnbroker's property. Okay. For items that are not sold via the license auctions, okay, these are typically sold through the retail and trading business of its pre-owned jewelry and watches. So this business will typically fetch a margin about 10 to 15% from retail walk-in customers, and about 1 to 2% from independent traders dealing with jewelry, gold, and watches. So this actually provides a low-risk, super business model. On the pawnbroking industry in Singapore, we note that the pawn shop pledges received have rose from 2.8 million in 2009 to 4 million pledges in 2012, and it has a high rate of redemption at about 95% in Singapore. So this actually poses a low risk in the for the pawn shops. On the loans that's given out by the pawn shops, okay, the amount of loan has actually grown at a annual rate of 19.7% over the last 10 years, and this is actually more than doubled since 2009, which right now is at 7.1 billion in 2012. And going forward, we expect a high single-digit year growth in the pawn shop industry. If you exclude the recent spike from 2010 to 2012, okay, the pawn shop loans given out is experiencing a growth rate of about 8% annually. So we think this is a reasonable figure. The investment merits I'll be sharing on the investment merit of the company, and we have identified these 4 main merits. So firstly is we expect an increasing demand for pawn shops. Okay. Second is it has a low risk business model. Okay. And thirdly, we expect a strong holding of interest in gold, jewelry, and watches in Singapore. And lastly, on its experienced management team. On the expected increased demand for pawn shops, okay, this is we believe this is due to the loan tightening measures that's implemented by the government. Okay, given the recent tightening measures on property as well as on motor vehicles, okay, this actually leads to a lower loan to value limits, and hence increasing cash needs among the population, as you have to pay more on their loans. Okay, recently, MAS also announced that they will be tightening further on the credit cards and unsecured lending, which will take effect progressively in 2 years, starting from December 2013. So we see credit cards as a potential market whereby the pawnbroking business will actually may benefit from these tightening measures. On the social stigma, we believe MoneyMax has done pretty well in its advertising and improving the image of pawn shops, and this actually has helped to reduce the social stigma of visiting a pawn shop. Okay, with its new design that without any metal grills and high counters, okay, this actually it has a more welcoming design, and due to its increased advertising effects, okay, it will actually boost awareness of the pawn shop business. And management has also guided that customers are mostly sticky due to the high customer service quality offered by the staff of MoneyMax. So if you look on the left, we have a traditional pawn shop design with these typical metal bars and high counters. And on the right, we have the design of MoneyMax outlet that's much more modern and friendly. So on other merits, we see that the pawn shops are they provide much cheaper and quicker borrowing source, okay, with interest rate capped at 1.5% per month. This is cheaper than credit card charges. And with its aggressive expansion of its network outlets, okay, it will provide a wider reach to customers. Many of these outlets we note that are actually of close proximity to MRT stations, so these areas will tend to have more human traffic and thus it will help to boost the business. Okay. We also note that Singapore is probably one of the most expensive city given cited in many surveys, and with the high rising inflation costs, we believe this will lead to more people it will lead to more people having to cope with living expenses, and thus the pawn shop business will likely benefit as this will deal on higher cash needs from the population. On its low risk business models, we mentioned that the loans may range up to 92% of its value and redeemable within 6 months. If the pledge is found to be stolen goods and if acted in good faith, okay, the pawn shop will be insured against losses. Unredeemed pledges will then be auctioned off, and if unbidded for, it's typically sold through its retail and trading business, which I shared earlier. So all these will actually led to no bad debts despite attractive interest of 8.8% per the 6-month tenure of its loan. And MoneyMax also will benefit from savings from centralized job functions and also lower borrowing costs from the banks that's relative to smaller pawn shops, given that it operates many pawn shop outlets. And on the strong holding of interest in gold and jewelry watches, we note that retail sales for jewelry watches has also trended higher since 2009, and this implies that larger holdings can be pawned among the population. However, we have a bearish outlook on the gold prices, but this also means that consumers are more likely to pawn their old gold rather than to sell them, and this actually benefits MoneyMax as its pawnbroking business has a higher margin compared to its retail and trading business. It also has an experienced management team, with the Lim family having 20 over years of experience in the jewelry business. Okay, we believe that the management team is able to leverage on the experience in the jewelry business to run MoneyMax more efficiently. On its peer comparison, I have identified MaxiCash and ValueMax as the main competitors to MoneyMax, and given that most of the increase in pawn shop outlets in Singapore recently are coming from these 3 chains, we believe going forward these three pawnbroking chains will increase their market share in the pawnbroking industry. Based on the average loan balance per store, we note that MoneyMax is trailing behind ValueMax as MaxiCash. However, this also may mean that it has higher growth potential, as we see that compared to ValueMax, the loan balance per store is experiencing a slow growth based on the last 3 years, while MoneyMax is having a much stronger growth in that aspect. As compared to MaxiCash, MoneyMax also has a lower PE valuation, which is about we forecast about 20 times based on FY13 estimates. MaxiCash's current PE is about 40 over times. MoneyMax currently has no dividend policies as compared to its other two competitors. However, management has guided that dividends will be given out when the business is more developed. We note that MoneyMax is now in its growth expansion stage, and we in our view that it will likely give dividends when the business is more matured. We have identified the following risks. Like any other good business models, okay, it always comes with certain elements of risk. Firstly, it's on the risk from the gold price volatility, as the decline in gold prices will actually lead to lower collateral values and impairment of its inventories. And management guides that there's no hedging on the gold prices. However, we note that the loan to value of items will be revised every 6 months given the 6 months tenure of its loans, so the impact of this volatility will thus be limited to this time frame. On its interest rate, as MoneyMax has huge borrowing from banks to finance its pawnbroking operations, okay, the profit will be squeezed if the interest rate rises, and given that the interest chargeable on their loans is capped at 1.5% per month, this will actually squeeze its profit margin. However, we note that borrowing costs may rise in 2015 potentially, so the business still thrives on its current low interest rate environment. On the possible failure to renew and obtain license, each pawn shop outlets is required to a license to operate, okay, as regulated by law, and these licenses are required to be renewed annually. So there is this possible risk that MoneyMax is unable to obtain or renew its license. However, the management has cited that there's no failure of renewing or obtaining license thus far. And on the regulatory risk, MoneyMax will face the risk from possible tightening measures on the pawnbroking business, and also given that it hires a number of foreign workers to run its operation, it will also face the risk from higher foreign worker levies as well as the lower foreign worker quota. However, we note that it may also stand to benefit if from possible tightening on licensed money lenders. On its financials, the pawnbroking business has a much higher margin as compared to its retail and trading business. Given in the IPO prospectus, okay, pawnbroking margin for FY12 is about 32%, whereas for the retail and trading business, the margin ranges from 2 to 3.5% for the last 3 years. Going forward, management has actually guided that the revenue from pawnbroking will continue to increase as it expand aggressively from 7 outlets in 2009 to its current 29 outlets in October 2013, and is still a strategy of expanding with more outlets going forward. We estimate for 2030 year end that the revenue will be lower than FY 2012, given the lower revenue in the first half of 2013. However, this comes mainly due to lower revenue from its retail and trading business, as the management has reported in its second quarter earnings that this is mainly due to increased allocation of its inventories to its retail outlets, and MoneyMax will actually have a higher yield from retail walk-in customer as compared to traders. So we believe that this will, we estimate that this will still lead to an increase in the profit before tax for this year, for the end of the year. So on our recommendation, okay, to recap, we have identified the following investment merits, which is coming from the aspect increasing demand for pawn shops and low risk business model, as well as the strong holding of interest in gold, jewelry, and watches, and also run by an experienced management team. Okay, we have a target price of 48 cents for this counter based on DCF valuation, and this implies a potential 28 upside. So hence we are recommending on a buy rating on this stock. So this we're coming to the end of the webinar, and we will now take your questions.
Hi, there's one question regarding Sembcorp Marine, whether or not it's whether or not is it a good entry point right now. We'll give you a fundamental outlook with regards to Sembcorp Marine. Currently, we are still concerned with Sembcorp Marine's operating margin in terms of its execution over in the over in Brazil, yet because of the execution for the drill ship contracts for Petrobras. Given that it is their first time building the drill ship and it's over at the Brazil yard, we are pretty cautious fundamentally, and that's why we are still having a neutral call with regards to Sembcorp Marine. Thank you.
Hi, there's a question here to touch on the market outlook for the S&P and the STI on a 1 month as well as 3 month basis. Well, I think we're more positive on the STI than the S&P at the moment. The S&P is looking technically a bit stretched. Now, the S&P has been on an ascending triangle. So when you have an ascending triangle, I think the breakout from that can be very violent either way, right, upwards or downwards. Now, economically and earnings-wise speaking, the S&P is pretty much still on a bull market. We think so. But technically wise, Kenneth has been flagging that there are some on the breadth indicator side. It has been flagging that it would probably break on the downside. However, I think he has seen some slight improvement in that. So I would say for the S&Ps, stay cautious for a little while. Right now, it's testing the upward line of the ascending triangle. The STI, I think, is only just rebounding off the low that it had, and I think economic indicators are improving, and earnings is not too bad as well. So I think I'd be much more inclined to long the STI than the S&P at the moment. Which ETF should I choose, Nico or Spider? I like the Spider because it's really liquid. both of them have pretty good tracking capabilities in any case, but I think for liquidity-wise, I prefer the Spider.
Hi, there's a question with regards to the annual license renewal process for MoneyMax. Okay, basically, before MoneyMax has to obtain a license, it has to source out a potential location for its new outlets, and it will have to get the first on the outlet and its design plans, which will then have to be submitted to the registry of pawnbrokers. Okay, and then the application for the license starts. So on the renewal process, we note that most of the license held by pawnbroking outlets will expire in December. So this by then, each of its outlets will then have to renew its license to continue operations. With regard to okay, there is a question on how is MoneyMax compared to ValueMax, which will be listed on the main board. Okay, if you look at the previous slide, we note that given that MoneyMax is in the pawnbroking business, that's much relative newer as compared to ValueMax, which is already in this line for many decades in the pawnbroking business. So hence, it will be, this will probably explain why they are having a much higher average loan balance per store. But given that we believe that there's much upside growth potential for MoneyMax, despite it being trailing since it's relatively new, and it's also seeking to expand more outlets. We believe that it has a much higher growth upside as compared to ValueMax.
Hi, there's a question on Genting, on Genting's outlook. Okay, for Genting, we can actually look at the results released by LVS on Marina Bay Sands as a proxy. So based on that, we would expect that on a year-on-year basis, Genting's gaming volume should pick up from a low base in the previous year. In terms of quarter-on-quarter, we would potentially expect that the volumes would be relatively flat. At current price of 1.5, we think that its valuations are fair. This is also based that it's actually gone up quite a bit over the couple of weeks, potentially because of potential Genting being able to enter the Japan market. Once again, Japan is potentially looking to introduce casinos, and Genting has been one of the few contenders which could potentially open a casino in Japan. That said, this is going to be a long process. You would probably need to see the government allowing Japan to open up to casinos, and then after that there will still be the bidding as to which cities would have the casino before they would launch the bid for casinos in Japan. In terms of competitors, you would definitely have the likes of Marina Bay Sands and also the local players in Japan. So competition is also relatively stiff. In Singapore, we continue to look for better traction in the mass segment, especially because the mass segment continue to draw better margins at approximately 20+%, relative to the VIP of 3%. So once again, we are continue to look for potential increase in mass segment gaming volumes, and that when the mass segment gaming volumes pick up, that could potentially be a re-rating opportunity. But right now, the mass market segment continues to be relatively flat year on year.
Hi. There's a question on whether the market in Singapore, mainly pertaining to a pawn shop business, whether is it saturated, given that there's so many pawn shops. Okay. We noted that there are concerns on whether this industry is saturated, given the current number of pawn shop outlets in Singapore is 201. Okay, as of October. However, the management has guided that there is still growth opportunities in Singapore, and mainly it will face competition from these the other two big pawnbroking chains. Okay, and this comes from the fact that many of these older pawn shops are actually run by older generations of people, and without and if they have no succession plan, they are likely to either close the pawn shop business or may lead to them be acquired by the bigger players. So this presents an opportunity for MoneyMax to acquire the other smaller pawn shops strategy going forward. However, right now it's guided its growth strategy is focusing on establishing more new outlets. Okay, and given its that it is much bigger, you will also enjoy a lower borrowing cost, and also is able to offer a promotional rate of 1% for the first month. So we believe that this will help to garner more business from the smaller pawn shops. On whether there's any intention for MoneyMax to move business overseas, such as Malaysia, as I've noted that since the management has guided there's still growth opportunities in Singapore, it is not looking into expanding to Malaysia as of yet. Okay, however, going forward, this may still present an opportunity, as we note that the Malaysian market is much more relatively unknown compared to Singapore. Okay. It's a question on what is the loan balance per store. Okay, the loan balance is actually calculated based on the revenue from its pawnbroking business, as this revenue is recognized based on the interest earned from the loan. So given this revenue, we calculated based on the interest rate that's offered by the pawn shops, so of about 1.5% compounded, of course including the promotional rate of 1% for the first months. So we derive the loan balance and we divide by this number of its outlets, and that's how we get the figures.
I had a question here that China and the HSI were hit by China's short-term interest rate rise last week. So do you think this is the start of a bear market in these two markets, even the US market is rising? No, we don't think this is going to be the start of a bear market. Okay, so the 7-day repo rate in China rose because the Chinese government decided not to inject extra liquidity into the market. So this was viewed as a tightening move. So it's pretty much in response to what I was talking about just now, home prices rising, and the authorities decided that that was one way in which you can rein in liquidity rather than just hike interest rates. Okay, so I think that even that happening, what I see is that if the Chinese market has taken a very poor turn in terms of sentiment, the worst it can do is put a triple bottom now on the weekly chart of the A-share market. So we've had a double bottom in the weekly. I think the worst that can happen is that it puts in another bottom at that support level. Okay, so given that that's the worst case, I think the risk reward actually for China is pretty good, because we see the economy is improving, and actually I think we have a very near-term catalyst in the third plenary this November, which is going to look at pretty much sweeping changes in the hukou system, and I think that would be that's possibly a catalytic event. Where do we see gold prices heading? We see it heading south. So I think there's a short-term rally right now, and when that rally tops out, I think it's a good time to sell your gold or short it. The fundamentals for gold are just not there. The fundamentals for a stronger dollar is actually there. So you have a narrowing trade deficit, you have a narrowing budget deficit in the US, and just now we showed the chart that despite rising Fed Reserve balance sheet, gold prices have been going down. So I think the fundamentals for gold is not there. We had a question on Rousley. Although we don't cover Rousley, I think what we can say is that the property that Rousley is going to acquire is a very prime spot in Johor, very close to the causeway, and it has good backers, and I think amongst the reverse takeover plays of the Iskandar story, this is the strongest story.
Hi. There's a question with regards to the duration of the long term, medium, and short term on MoneyMax. Okay.
Once again, there's a question on the outlook on for MoneyMax. Short term wise, for third quarter, we actually expect that the third quarter results will be pretty good. This is from higher average loan balance, meaning that in the pawnbroking segment, we expect to see higher revenue. And bear in mind that this pawnbroking segment offers very attractive interest. You're earning an interest of approximately 18% per annum, right? So this for this we actually see the very good positive on that. In the medium and long term, we actually see we're also very positive in this pawnbroking industry. If let's say you to take away the last 3 years in which there was a huge spike, if you take that away, take away the huge spike, once again you're actually looking at a compounded annual growth rate of loans given out at 8%. Right, this is a very attractive rate, and this would actually, this potentially could continue. 8% once again could continue moving forward, and that will actually lead to very good growth in terms of the revenue that pawnbrokers can earn. Percentage of floating shares for MoneyMax is approximately 15% at the moment. Moving forward, management may actually increase the amount of floating by selling more of their own holdings to fund further expansion in the business. Okay, there's also a question on Genting Hong Kong. Unfortunately, we do not cover Genting Hong Kong. I think, however, and there's also a question on with regards to the Genting Hong Kong listing in listing the subsidiary in Philippines. We do not cover the counter. However, what we can say is that we like the Macau business. We see good growth still in the Macau business. Philippines-wise, Philippines is a pretty good market also. But once again, that would be based on a macro, and in terms of valuations, unfortunately, we have not looked at it. Once again, we have a few questions on counters like SIA and Jaya. Unfortunately, we do not cover it. On the ABL, the Asian Sons Blue Bonds, we actually also do not have we don't have any coverage on it. And SGX is, and the central bank is actually launching an investigation on it, and so probably you will need to wait for their investigation results for more color on these three counters.
Right. If there are no further questions, right, thank you for listening to the webinar, and we look forward to having you here for our next webinar, same time on Monday.
Yep. Hi. Hope you guys are still around. Just a last minute note. You guys can actually go on the website www.unifave.com to actually access the previous webinars and the slides as well. So yeah, I hope that sort of clarify you guys. Alternatively, actually do send out the slides to all of you guys before the webinar, just so that you guys can actually have a look before that. So yeah, that's all. Thank you.